Hi everybody, Andy Dick with Showcase Investments, and I want to talk about landlord financing when the bank says no or is just too slow. Of course, there are many financing options out there. A landlord can always use cash to improve the property. There are bank loans, which typically offer the best rates, lines of credit, and what I want to talk to you about are the private money or hard money loans. Okay, this is an important slide. It talks about underwriting considerations, and right here at the top of the list is the use of the funds. We are a business purpose funds lender, not a consumer use lender. So we want to make sure that ultimately, regardless of the collateral, that the funds are going to be used properly for some sort of business use. And just to give you a couple of examples, somebody may pledge their primary residence as collateral for a loan. That's fine as long as they're going to be using those funds for some sort of business purpose, like buying a flipping house or uh, buying inventory for their business. Conversely, if they have a commercial building and they take out a loan from us, but they're going to be using those funds for, say, renovating their primary residence, that's a consumer purpose loan. We don't make those loans. Our borrowers have credit scores which can be a little bit lower. That's fine. We do pull credit reports, but we also take a look at the ability to repay the loan. We don't have any established ratios. We just want to make sure that the funds are going to be there to repay our loan and make the payments. As far as the collateral goes, we're very interested in equity. We want to make sure there's enough equity in there to protect us in that loan, and we do that by getting an appraisal, and we'll also perform our own in-house valuations of the property's value and compare it, of course, to the outstanding debt obligations on that property. We want to make sure the property is in good conditions. I'll explain that in just a moment. And cross-collateralizing using multiple properties to secure a loan, that's fine. The reason why the condition of the property is important is this exit strategy right here. Ultimately, within the 1 year or 3 year or even 5 year time frame, we want to make sure that this borrower has an identified goal or a way to get out of this loan, whether it's to refinance us out or to perhaps sell the property. So a little bit more of an explanation about business purpose. Now, as I mentioned on the previous slide, when an entity is the borrower of these funds, we don't need to go into this level of detail about establishing these loans as business purpose. We want to make sure, however, that the funds are not going to be used for personal, family, or household use. Those constitute consumer use of funds. There are going to be times, however, when we may have to pay off some consumer debt in order to provide the business purpose loan. As long as at least 51% of those proceeds will be used for that business purpose, we can make those loans. For every one of these loans also, we consider these 5 factors. The most important one is going to be that last one. We want to get a handwritten statement by the borrower that the funds are going to be used specifically for an identifiable business purpose, and then we keep that letter as part of the loan file. So when a landlord comes to us for a loan, they oftentimes will supply either a 1003 loan application. We also have our own custom loan forms as well, which include these borrower representations we've been discussing. We pull a credit report, and then we ask the borrower to obtain an appraisal made out to Showcase Investments. We then look at these 4 keys: the use of funds. I've been explaining business purpose. We want to make sure there's enough equity left in the property, that the borrower has the ability to repay and make payments on the loan, and that they've identified an exit strategy down the road. Once we get all these things, typically we can fund these loans within 5 to 10 business days. So when a landlord is looking for financing, why come to a private or a hard money lender? Well, first and foremost, fast closing. Our loans can close in as quick as 5 business days once we get all the documentation. Also, we employ make sense underwriting. If the title is clean, if there's equity in the property, it's in a good location, good condition, we can make those loans regardless of the credit score in most cases. We don't require tax returns, we don't require bank statements, so far less documentation than you may have with a conventional or a bank loan. The borrower can be either an individual or an entity. As I mentioned before, when it's an entity, there's an exemption there for the business purpose. And also knowing that the landlord is working with a direct lender. We fund our loans directly. We either hold them on our books then, or we will go ahead and assign those to particular investors, not a fund. Most private money lenders have a stable of borrowers. Ours include the following: these flippers, business owners, buy hold investors, builders, developers, and also funds used for trust and probate. So let's take a look at a couple of these borrowers that are of most interest to landlords and property managers. First of all, as far as Showcase goes, we lend on residential 1 to 4 unit properties for purchase money, but any size building, we can lend funds for rehabilitation loans. Regardless of whether it's purchase money or refinance, we never exceed 65% of the current market value for our loans when it's in first position. That'll drop down to 55% CLTV in second position, and we don't offer any lines of credit. We base all of our loans on the current market valuation of the property, and when it comes to the funding, we can negotiate that with the borrower, whether we're going to be fund controlling it ourselves, letting the property manager control the monies, or use a third-party fund control operation. So for builders and developers, primarily what we're doing is ground up and remodeling work throughout Southern California. When it's a primary residence of a consumer, we can do ground up construction loans. That's okay as long as the ground hasn't been disturbed. When it comes to an investment property like an apartment building, there we can either do ground up construction or remodeling work. There are always going to be fund control considerations. Smaller loans, anything less than $100,000, we can fund control ourselves. Anything over that $100,000 threshold, we typically hire third-party fund control companies. We do not get involved with soft costs. That's paid for by the borrowers. We only get involved with the hard costs. And of those hard costs, we're only going to loan up to a maximum of 65% of the completion value for that project. So as far as loan terms, these are usually short-term, 1 to 3 years. You can go interest only or 30-year partially amortized with a balloon payment. Of course, we're talking about always being real estate secured by the equity, first or second. And as you can see there, $35,000 our minimum loan charge. We only go up to about $1 million because all of our loans are placed with investors, and we fund very quickly. 5 to 10 business days is not unusual at all. Here I'm showing you one of our loan charts. So you can see some of the different scenarios. Now this chart is also available as a handout, or I can email it to you. It's a good chart to keep handy because it really does isolate the different kinds of loan programs and what some of the exemptions are and some of the non-exemptions, such as consumer uses. So you can pause here, take a look at this chart, or contact me. I'd be happy to send you one of these charts separately. So thank you very much for watching. That's what we do at Showcase Investments, and these are pretty typical considerations for private money or hard money lenders. I look forward to working with you.